The market drops and the bears celebrate. But are they celebrating too soon? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that we weren't sure if Wave 4 was finished or still ongoing, and we needed a little more structure to figure that out. Yesterday, the bears gave us a drop, which gave us some structure to work with, but now the question is, are the bears celebrating too early? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the charts, as always, we take a look at what happened with the indicator. It absolutely killed yesterday. We're going to look at a few different charts and see what happened. So let's jump in there and take a look. Okay, guys, so here we are on the 5-minute SPY chart. And if you're new to the channel, we built our own custom Trading View indicator. It only works in Trading View. We are in Trading View right now, which is a charting software. You have to have a Trading View account to use it, but it's used for day and swing trading, and it's absolutely killing, as you're going to see again today. And you can go back and watch weeks and weeks of videos. I show every single day how it does, and it's absolutely crushing. So what you need is you need a Trading View account, and then you need real-time data on the NASDAQ and the ES in order for it to work properly. If you have those things, you can sign up for it. I'll tell you how to get it in just a little bit. But let's look at what happened today. So on the 5-minute chart, we day trade. We also use the weekly chart for swing trading. We're going to look at that here in just a minute. Right out of the gate, we got a sell signal. Right at first bar of the day, first 5-minute bar of the day, we got a sell signal. Do you think it was beneficial to be short after the gap up, after the market was bulling up and moving higher, to be short the first candle of the day? Do you think that this was beneficial and profitable? This is what the indicator is all about. It makes trading easy. You don't have to look at 100 different things. You don't have to check all of your moving averages and all of your time frames and everything else. It does all of that for you. It's forward-looking price action trading. It trades off of key levels, and it understands that. It's not waiting for some moving average to cross another moving average, and then you're in 3 bars too late. It gets you in when the move is going to happen. You can see we got in right at the top, smashed it all the way down, and then a few bars later, it said, hey, get long. This was a small winner. You came back. This was a little bit of a loser here. Then you had this nice buy. I stop at 10 o'clock. This was right before 10. This buy signal came in, and another nice winner to the upside. So an absolute monster downside trade, a buy winner, and then a nice buy winner here with a loser in between, I think is a pretty monster day. And that's just on the day trading side. As you can see, this makes trading simple, and it helps traders be able to relax, understand when to get in and out of the market, and do this stress-free. Are they all going to be winners? Of course they are not. But when you get in at the top of the trend and they trend it down, that trade right there, that's a 7-point move. That trade right there would pay for years of the indicator. And that's what we want to do here, is help you understand how to play the market without having to do hours and hours of work and stare at 25 different charts and hope that they all line up and get the exact right symbols together and everything. We do it all for you. It's all in our algorithm. It's an incredible price action indicator. This was our day trading day. Now, remember, yesterday we talked about Micron as a swing trade alert, and it was up 12% in one day. Let's check out how that one's doing. Okay, so we're on the Micron weekly chart. You can see you got a buy signal right down here last week, the last week of the year here. If you got in right here at $90, which you got to wait for the end of the week to get in. So if you got in right at the close at $90, it gapped up to 101 on Monday, and then yesterday on Tuesday, they took it all the way up to 106. So in 2 days, you made 18% on your money with just buy and hold trading. We use options. Options absolutely blow that out of the water. You probably made 150% on that. I didn't have this trade. One of my members brought it up because I can't scan every stock and find every trade, but one of my members found it and killed. And this is what I'm talking about. This is what the indicator does. It finds these amazing trades and gets you in at the right time so that you can catch these types of moves. Again, are they all winners? No, they are not. But the winners are huge, and they're crushing, and they're helping traders win. We had another one on RTY. Let's check out RTY today. We had a member post in the main room that we got a beautiful sell signal on RTY. So let's check that out. You can see right here on the IWM chart, right? The market tried to push higher. Chop, chop, chop. When it broke down, you got the sell signal. Right here at 225, they rode it all the way down here to 221. Absolute crushing sell signal. Turns around, gives you the buy right after that at 222. Takes it right back up to 224. Another smash trade. Absolutely killing, guys. This indicator is absolutely crushing the market, and I want you to have it. I want you to be part of it, and I believe in it so much that I do a 30-day money-back guarantee, and if you want to get it, here's how you do it. First, there's a link down in the description. Click that link. That will take you over to our webpage. Once you're here, you can get the indicator for $59 per month or $5.90 for the year. This is an absolute steal for what you get, and you get a 30-day money-back guarantee. So try it out. Use it. If it doesn't do what I say it does, if you don't like it, shoot me an email, and I'll say, okay, no problem. I get it. You didn't like it. Here's a refund on your money. You get your access to the indicator taken away, and we both go our separate ways. There's no risk at all here. So I really want you to be a part of this, guys. I'm really excited about it. We have almost 200 users. We just launched it at the end of the year. We already have 200 users using it. It's absolutely insane. You can scroll down and see what people are saying about it. There's a whole bunch of commentary of how people are finally beating the market and understanding how to beat the market and doing it without having to do all the work because we did it for you. So check that out. I really want you to be a part of it. Now, let's jump into the charts and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And we got the big move down today or yesterday, and they moved to the 618 retrace of the bounce here. So from Thursday the 2nd up to the 6th here where they hit the high, they've retraced about 618%. Now this is a very common retrace for a B wave, which is what you would expect here if you're bullish. And this is why in the intro I said have the bears celebrated too soon. If wave 4 is done, this is a very nice setup for an A, B, C into the highs, and this would be wave A. This is what I talked about yesterday as a very likely path event. If we're going to be bullish, you would look for this A wave to have an A, B, C into the highs. Then you'd look for them to reject the highs and a B wave, and then C up towards 6,300. So far, following that path pretty well. The interesting part of this, though, is that you can count 5 down here. I would prefer another low. Let me be clear about that. You could count this as 5 down, but I would prefer one more low, especially into this 59.20 area, which would be a big setup for both the bulls and the bears. And the reason for that is the 764 is kind of the must-hold zone for the bulls here. They really want to hold the 59.20 area or so. If you draw a line across, it's huge support. So we're going to draw a line straight across here. And you can see that this came up and failed that area, came back, broke out. They came back, tested it here, tested and failed it here, tested, broke it down here, broke back through it, tested here, tested here, tested here, tested here, and coming back to that area. So huge support there, huge area of importance, the 59.20 area. And that will be a major bull-bear battle zone. So if they come down and make this wave down, it would be a pretty solid 5-wave down structure, which is what you would expect from a bearish count. So this is kind of the crux of where we're at, where you're in between the two counts. You have a 1, 2. I do think this is probably 3, 4, and then we'd look for 5 into this area. And then you'd look for a bounce here. This area should produce a bounce because of the heavy support that we see. If they just cut right through it, then we're looking at a more direct wave 3 C wave into this blue box, and you're just looking at a straight down selling event at that point. But they should produce a bounce, and that bounce would be kind of a wave 2 here, and then you'd look for 3, 4, and 5 into the blue box, and then we would still look for resumption of the uptrend. Whether they come into the blue box or not, I still think 6,300 is the target to the upside for the next move, and that's what I'd be looking at. So this is a solid move down for the bears so far, but they haven't broken through yet. They haven't gotten through 59.20, and they still have some work to do. So they don't want to celebrate too soon. They still have to follow through. They want to push down into this 59.20 area. Again, I would expect a bounce right around that line. From there, we'll know a lot more, because if and when we get a bounce, let's say this is 5 waves down, or this is the move down, this is the B wave. If this move up, okay, is corrective, if it's an A, B, C up, then you would expect continuation to the downside. And the reason for that is, remember, off of this low, if we're going to be bullish, this should be A, this should be B, and this should be C. So a C wave is impulsive. So if we get a corrective bounce here, then I would look for follow through to the downside that comes heavily into this blue box. However, if they rip it and we start getting an impulsive move to the upside, then it's going to start to look a lot more like that bullish count, where we look for 5 waves off of the low into this area, and then you look for a corrective pullback and then continuation overall into the 6,300 area. So the bounce, when it happens, or if it happens, I should say, because they can still cut straight through to the downside here. When the bounce happens, it will be important because a 3-wave bounce tells us we're likely coming down into the blue box, where a 5-wave bounce tells us this was likely wave B of A, and we're looking at that A, B, C up for A into the highs, then a B wave pullback, and then C up towards that 6,300 area. So structure is going to be important. We need to watch and see what we get off of this low and or a new low if they come down into 59.20, which I kind of expect them to try to do. If they can get down there, I do expect a bounce off that zone because of all of the support, because of the 764, the fibs, everything else. It all lines up. And then we'll decide if the bears should start celebrating or if the bulls are going to start face ripping. Over on the NASDAQ. Now, again, we talked about this yesterday, that the NASDAQ does have a cleaner structure because the A, B, and C has the C wave that came down lower than A, whereas ES does not have that lower low here. And so it is a little cleaner on the NASDAQ for this to be A, B, and C of A, and then a B wave, and then C down. Again, you do have a nice look on the NASDAQ for a potential 5 down, although I do think they need to come down towards this 21,200 area overall, which would give them a better looking 5 down. It would also be very heavy resistance area if you look across, or support area, I should say, if you look across. And we would look for them to bounce that area. And again, the bounce will matter. If the bounce is an ABC, then we'd look for continuation to the downside. If the bounce is 5 waves, then we'd look for this to be the A wave of 5, the B wave, and then the C wave of 5. And remember, we're dealing in diagonals. That's why we have an ABC instead of an impulsive wave. Understand that diagonals are corrective structures that make impulsive structures. So a little bit confusing when you get into diagonals, which is why you should check out our Advanced Elliott Wave course where I teach all about that. But that is kind of what we're looking at right now with this structure. So NASDAQ a little cleaner. We would be looking at this as a potential 5 down here to start a C wave into the 20,400 or so area. The bears, or the bulls rather, excuse me, the bulls must hold this wave too low around 20,100. If they break this low, it breaks the bigger structure diagonal and doesn't allow for this wave 4 to be placed over here because it would be lower than 2, and that's not possible. So we would watch for that as a potential here. And then we would look at a bigger structure to see if there is still some bullish potential, which I think there would be, or if the bears are going to go ahead and push down. Again, I do think both indexes, the ES and the NQ, will get bought, whether it's already getting bought now or they do it from a lower area, looking at 6,300 and 23,000 overall. If they do not and they break down, then we'll have to look at deeper supports and setups at a possible bigger correction overall. Breaking this wave too low here would be a warning to the bulls. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you over to our webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial. And the reason is I want you to get in there, make sure you love it, become part of the team, and make sure it's for you before you ever spend a penny. You can cancel at any time. You literally have nothing to lose by checking us out. You can come sign up for that week, never trade anything, never do anything but listen, watch, and learn, and decide if it's for you. If it's not, cancel and move on. You paid nothing. If it is, get on board and let's make some money together, and we'll have a great time. We also have our educational material. We have our Elliott Wave beginners course as well as our advanced Elliott Wave course. These courses are helping traders understand these complex markets and finally make money because they can identify key levels, setups, and how to trade them. That gives you a huge advantage. In our advanced course, we're going over the many things we've been talking about, especially and including diagonals. But we have an introduction, the fib levels, diagonals. We go through in-depth on all of the diagonals in bite-sized chunks so you can understand them. We use them in charts so you can see how they look. We go through all of the double and triple threes, the flats, the triangles, and really the most important module in here is trading Elliott Wave because so many of you get confused or just don't listen or don't understand that key levels matter. And even though there's an up and a down path, there are several trading setups along the way, and we trade those setups effectively. Just because I say it on this video, which is a free video that gives you an overview, doesn't mean that's the setup or the look we're looking for to trade. So this module alone is incredible. I think you would really benefit from it should you want to take this course. Now, if this is too much and you're just getting started with Elliott Wave, we do have our Elliott Wave for Beginners online course, And this course is helping real traders make real money and finally understand the market in a way that makes sense. It can be so confusing when good news makes the market go down and bad news makes the market go up, because it doesn't matter. The news doesn't matter. It doesn't matter what the fundamentals are. It doesn't matter what the earnings season is. It doesn't matter. The market is going to do what it was already going to do, and the news is simply a catalyst that allows it to do that. I'm not saying the market doesn't move on news. I'm saying that the tone of the news doesn't matter. Bad news doesn't make the market go down all the time, nor does good news make it go up all the time, and that means the news is irrelevant. The market had a path, and it's going to follow that path, and Elliott could identify that and identify the key levels, and that is what separates you from the rest of the market. In this course, you get 25 videos. You get an introduction where we introduce you to Elliott Wave, what the expectations are, your mindset and emotion, and why it works. We go through the chart setup and tools, where we go through every tool you need to use with Elliott Wave, why and how to use it. And then Elliott Wave for beginners, where we go through each of the waves, the corrective depth theory, the pivot, the theory of alternation, all of the different things you need to know to make sense of this irrational market. The cool thing about these courses is, if you want to get them at a discount, we have our bundle pack where you get $37 off by buying both courses at the same time. However, if you just want to get them for free and not pay for them at all, simply join one of our monthly rooms, as they are included in these prices. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video that's about an hour long where we go through all of the charts, all of the levels, understand all of the supporting evidence for the overall market, the health, answer all your questions. That video alone is worth the price of admission. You also get the training material. You get both courses, the advanced and the basic Elliott Wave course, and we trade the SPY and the QQQ, and we swing and day trade, so we do trade quite often in my room. Now, if you're looking for futures, individual stocks, income trading, and advanced training, you need to check out PT's Throne Room. And there you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, his income trading method that crushes the market, and his reduced risk binary method that gets you in at a cheap price and gets you huge multiples on your money. And it's how he structures that trade that's so unique. It's something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today: the bounce matters. When and if we bounce, if it is a corrective bounce, a three-wave bounce, we would look for market continuation down into this blue box here and follow through from the bears. If it is an impulsive move, we would look for this to be C of A up into the highs here around the 6150 area or so. Then we look for a pullback and then continuation from there. So the bounce matters. That's really what we're looking for overall. Over on the NASDAQ, same situation. You have the pullback, the bounce matters. If the bounce comes and it's a three-wave bounce, we would look for continuation down toward the 20,400 to 200 area. If the bounce is impulsive, we would look for them to rip it back toward the highs for the A wave, pull back in B, and then up towards 23,000 plus in C to give us the next move higher. Guys, I will not have a video for the rest of the week. On tomorrow, the market is closed for Jimmy Carter's funeral, and then Friday I don't do videos. So have a great weekend. I will be providing updates in my room as always, so if you want to be a member of that, you can get updates there. Get away from the computer, get out of the house, have a good time, and I'll talk to you next week.